Hello everyone, my name is Kaseem. Welcome to the channel. In today's video, we are going to talk about options, and the particular type of options that we're going to talk about is about selling options. So that's the sell side of options. This is not day trading. This is just the sell side of options. Okay. And what we're going to talk about today is we're going to talk about some of the trades that I made. We're going to talk about that today. But before we get into this, I want to let you know that I'm not a financial advisor. I'm not your financial advisor. And I'm not telling you to invest in these companies. I'm just sharing with you what I'm doing so you can use it for educational purposes and, just educational purposes to be able to learn from it. Do not do what I'm doing until you have a better understanding of how the whole thing works. And obviously you're watching my video, so you're trying to learn how the whole thing works. So it's just a legal disclaimer. I'm not a financial professional. I'm not your financial professional. So consult your financial professional. So with that out of the way, let's get right into it. Today, in this week's trades, I actually did a couple of trades and I was able to net a total of over $1,000 this week, which was really nice. But the market has been down a lot, so I've had to kind of manage the trade, as I go during the week. Normally, I really don't manage the trade. I just buy on Monday and sell it on Friday. Wait for it to either expire and I get shares, or expire worthless on Friday. Okay. So in today's video, we are going to look at some of the trades that I still currently hold. I have Tilray, Palantir, OEG, and Blink Charging. And some of the stocks that I currently hold on this portfolio is Blink Charging and Tilray. And with these two, with Blink Charging, I'm currently doing this covered call right here. And this covered call right here, I currently have that for Blink Charging. So what this contract is saying is I'm willing to sell Blink Charging at $48.50, and for me to do that, I got paid. As you can see at the bottom here, I got paid $234 for me to do that. So what would happen is, if by Friday the company Blink Charging, if I go to their stock right here, if by Friday the company Blink Charging does not close above my strike price, which is $48.50, the contract expires worthless, and I get to keep the amount of premium that I collected, which was $234. So that is an option trade that I did with Blink, and basically that's how it works. I'm saying that I'm willing to sell the stock, so I put the contract out there, and if I'm saying I'm willing to buy the stock, I put a contract out there. And anytime I take one of those actions, I get paid, and it's called premium. You collect premium whenever you do stuff like that. So that's pretty much it. Let me give you another example here. Let me do the second one, which is Tilray. So the second trade, Tilray here, the current price for it is $30, as you guys can see. Currently own about 100 shares, and with this 100 shares, I went ahead on Monday and I did a covered call on it. I wrote a contract, an option contract, covered call, as you can see with the at the option section here. I did a covered call on it, and that's when I'm saying that I'm willing to sell the shares that I own, which this 100 shares that I own right here. I'm willing to sell it for $32, which is this contract that is right at the bottom of this whole option thing, this contract at the bottom right here. I'm willing to sell it for $32. So what I'm saying is, I have the shares, I'm willing to sell it for $32, but while I wait, I got paid. If I scroll down and check the price that I got paid, just give me a second here. Okay, so as you can see right here, if you look at history, the first transaction February 16, 2021, and I got paid $330 for that. So right there, the two stocks that I have made me $500 in profit. Like $500 money that stays in my account, and I can transfer it to my bank account. And two things that can happen at the end of this contract, which is going to be on Friday. You know, every contract expires on Friday. So two things that will happen is this contract, if the stock price Tilray, if I go on top, if Tilray current stock price is at $30, if it closes, if by Friday 4 p.m. Tilray stock price is at $30, this contract right here, this option contract, expires worthless. Like basically the $300 that I got paid, if I scroll down to the bottom here, the $300 that I got, $330 that I got paid on February 16th, this contract $330 February 16th, I get to keep that $330 as profit, and I can turn around and do the same thing next week. The amount of money that you get paid when you do this contract varies. It's all based on market conditions, but this is something that can be done pretty much on a regular basis every week. So that is that. One way that I can explain what I'm doing here is, like, let's say for example you own a house, you own a property, you know, and you own the house outright. Like how I own this 100 shares, I own it outright. Like this is my stock. Okay, I own 100 pieces of the company Tilray. So the way this works in an easier way that I can explain it is, if you own a house or you own a building or whatnot, if you own it outright, you can decide to go to the bank and say, hey, I own this house. This house is worth $100,000. I'm willing to I'm willing to put the house up for collateral, and the bank will in turn give you a loan against the house. Now, if you refuse to pay the loan back, then the bank can sell the house, get their money, and send you the rest. That is basically what I'm doing with this option contract right here, and that is Tilray. I own the 100 shares, and I'm saying I'm willing to sell it for $32, and I get paid for waiting for it to happen. If the stock price gets to $32, it will sell the shares and get the value of $32 back. And if you don't get to it, the contract, the $32 contract, this contract expires worthless, and I get to keep the premium that I collected. If I scroll to the bottom here, the premium that I collected for this was done on February 16th. The premium was $330. So that is how this worked. And the other great thing about this strategy is, like, in option there's something called the Greeks, and one of the important part of it is theta. Okay, this is time decay. Every single day that you own an option contract, if you're on the buy side, every single day that you own it, and the contract decay, because it expires on Friday. So every single day that you own it is worth less just because of time. So when you're on the selling side of options and you're willing to buy or sell the stock, this works in your favor. Okay, so that is why I love this strategy so much, and I am continuing to do. I'm doing more regular videos on it on this channel. Okay, so the next company that I'm going to talk about, I'm not going to talk about every single one of them because I've explained two call options, how that works, selling covered calls. I've explained how that works, and now I'm going to talk about Palantir. This is this one right here, and this is the contract where I'm willing to buy Palantir at 28.50 puts, right? So this is a contract right here, 28.50. So if I go into the stock, let's check out the stock right now. So if I go into the stock, Palantir, the current stock price is at 25. So this is the thing with option contract. This is where some of the pros and cons come to play. Okay, when I did this contract, if I look back a week now, a week was on the 16th. When I did the contract, the stock Palantir stock price was way above $28. That's for sure, because I usually want to buy a couple of dollars below. Yeah, right here it was like 28, 29. It was like $29. So I was saying that I'm willing to buy the stock. Okay, if you look right here, Palantir stock, the stock price is currently at $25. And I scroll down to the option contract here. What I'm basically saying here is I'm willing to buy the stock for $28.50. You see the PLTR 28.50 puts. What that basically means is I'm willing to buy Palantir stock for $28.50. So what happened is all throughout the week, the stock price went down further than what the price that I'm willing to buy it at. Sorry about that. The stock price went down further than where I'm willing to buy it at. Okay, so what would happen is this stock is gonna get assigned by Friday, and most likely what would happen is right off the bat I'll be at a loss on that particular stock. But what happened is, by doing this to buy a stock, it reduced my risk. Okay, it reduced my risk because if I scroll down here, I've already gotten paid. If I scroll down here, I've already gotten paid about $121 when I decided to open that contract. $121, I got paid that already, like right off the bat. So that is good. That is good because that's $121 that I can put towards the losses. Okay, because I'm currently down $234 on it. But this is okay because what would happen is next week when the stock gets assigned, then I can turn around and say, hey, I'm willing to sell the stock next week, the February 26th. I'm willing to sell it. I go to sell here, and I go sell call, and if I scroll all the way up and I look at the 28.50, I'm gonna get paid $74 for that one contract. That is less amount of money, but it's okay. I can do for 70. I can do for the same price that I entered it for, or I can do less. I can decide to, if the stock keep running down, I can say, okay, you know what, I'm willing to sell it for 27 and collect $100, take the L, and just keep things pushing, because these things does involve some risk. There's some risk involved, and this is the kind of risk that you put on when you take trades, like when you do option trading. You know, nothing is 100% risk free, but this is more like a better bet. Okay, this is more like a better bet. So with that being said, as I'm talking right now, I'm gonna play some screenshot of some of the trades that I made today. I just put plaster on top of the video, just so you can see exactly what I'm talking about. All the plus that you see is basically you know, credits into my account. That's the amount of money that I'm getting paid into my account just by opening these various option contracts. And I really like doing this because this is a good way to generate passive income, to generate, you know, some sort of recurring income that, you know, you can rely on a regular basis. You know, this is a strategy whereby I'm willing to add it to my portfolio, and I think it would really help my portfolio in general for the long term. So I'm going to keep on doing this video. I think in total for this week, I generated at over $1,000 in income. for the portfolio, so which is great. I mean, obviously some of it is down right now because of blink charging and all that stuff, but it's okay. It's all part of doing this business. This is all part of doing this business. So thank you for watching. Thank you for watching. If you like what I do here, consider subscribing to the channel. If you find this video educational, consider liking the video, sharing it with friends and family. Share good information that you like with other people, because they might like it as well, and they might learn something and maybe want to do something for themselves as well. So thanks again for watching. Please share the channel, like, subscribe. All that stuff helps me as a creator putting this content out. I put in hours with my YouTube channel, and I believe long term this is going to be a great thing for the investment community, the retail investment community in general. So like, subscribe. Until next time, see you later. Take care. Bye.